Students, welcome to accountancy class. I am NARSIMULU, commerce teacher. Today I am going to teach you CEC first year accountancy topic journalizing accounting transactions in the journal. Students, you already know that there are three types of accounts and they have their own principles. And what are the three accounts? First one, personal account. Second one, real account. Third one, nominal account. Personal account principle is that debit the receiver, credit the giver. So personal account principle is debit the receiver, credit the giver. And real account principle is what comes in should be debited, what goes out should be credited, or debit what comes in, credit what goes out. And come to third account, that is nominal account. So nominal account principle is all expenses, losses, cost should be debited. All incomes, gains, revenues should be credited. So here these three accounts, once again nominal account principle, expenses, losses, cost should be debited, incomes, gains, profit should be credited. Okay student, so you should be remember these three accounts and their principles forever. And come to next, as per dual aspect concept, every transaction must have two aspects. It is an assumption that every transaction should have two aspects. And here, before going to write the or understanding or analyzing the transaction, we need to identify two aspects which are in the business transaction. See here, one transaction is given, that is 10th January 2018, goods sold to Madhuri rupees 80,000. Here goods sold to Madhuri for rupees 80,000. Okay, rupees 80,000. So in this accounting transaction there are two aspects. To identify two aspects we need to ask some questions. First question, that is there a name in the transaction? Yes, there is the name. Make it underline. Okay, keep it aside. And you ask some more questions like is there expenditure? If you observe this transaction, there is no expenditure. Expenditure means payments, payment salaries, payment electricity bill, telephone bill, transport expenses. So all these comes or expenses. So there is no such expenditure in this transaction. Keep it aside. Is there any income in this transaction? Ask this question in your mind. No income, and keep it aside. And ask in your mind one more question, that is there any asset? Yes, if you observe goods, that is asset. Goods, that is asset. Sale of goods, goods sold. Okay. So goods asset. We find two aspects. One is name, and second goods, that is an asset. Okay student, after finding these two aspects, now you see that names comes under which account? Yes, personal account. Names related to personal account. So names comes under personal account. So here you write personal account. Personal account. So here one more step, that is personal account principle. What is the personal account principle here? Receiver account debit, giver account credit. So if you observe the transaction, goods sold to Madhuri. So here we sold the goods to Madhuri. When we sold the goods to Madhuri, Madhuri is the receiver or the giver. You can ask this question in your mind. Is Madhuri is the giver or receiver? So here Madhuri is the receiver. Madhuri is the receiver. So receiver account should be debited. Madhuri is the receiver. So receiver account should be debited here as per personal account principle. Madhuri account debit. Next come to goods. Goods is always an asset, and here one more point you can keep in your mind, that when you see a sales in the transaction, good sales, which that always comes in the credit side of the entry, and it is a blind trick that is you can keep in your mind. And what is that? Whenever you see the good sales, that always comes in the entry credit side. Okay, that is one part. And come to here, goods is an asset. Goods is an asset. Okay, so assets comes under real account. Assets comes under real account. Make it, you can go to write here real account. Okay, students, what real account principle says here? Real account principle says that what comes in debit, what goes out credit. So here when we sell the goods, here are the goods coming into the business, or are the goods going out of the business. So when we sell the goods, generally goods go out of the business. That should be credited. Okay, goes out, and whatever that goes from the business, that should be credited as per real account principle. So goods, sale of goods, or yes, sale of goods account, that should be credited. Okay, sir. So after finding debit account and credit account, now we can go to write entry in the journal. See, on 2018 January 1st, here debit account. What is the debit account here? Madhuri account debit. So write Madhuri account debit. In the debit column, amount rupees 80,000 against this account you can go to write. Next, credit account. Which is the credit account here? A sale of goods. So here you can go to write either sale of goods or sales account. Both are accepted. Either you can go to write sales account or sale of goods account. Both are accepted. Okay. So sales, you can go to write either sales account or sale of goods account. Both are accepted. Against this account you can go to write rupees 80,000 in the credit column. Now write the journal entries. Journal entry being goods sold to Madhuri. Okay, children, like this we can go to write the entry. So what is the process here? First, you must know three types of accounts and their principles. Then you must be aware of the dual aspect concept. After that, you read the given accounting transaction. After reading the given accounting transaction, you must find two aspects as per dual aspect concept. After finding two aspects, you must find the related account. After finding the related account, you can go to apply the appropriate account principle. So after applying appropriate account principle, you will find the debit account as well as credit account. So after finding debit and credit account, you can go to write entry in the journal. In the date column, date on January 10th. On January 10th, Madhuri account debit, in the debit column amount 80,000 to sales account, or we can go to write sales of goods account. Both are accepted. Anyone you can go to write here rupees 80,000. And one more point you can keep in your mind, sales account always come in credit side. Sales account always comes in credit side of the entry. Keep this point in your mind. It is very, very important. Okay. After that, you can go to write being goods sold to Madhuri. This is the narration. So this entire process, you can go to think in your mind. Last, after finding debit account and credit account. These two items you can go to write in the journal. This process should be happen in your mind. Okay students, I hope you understood how to write the journal entry for the given accounting transaction when the credit sales are given in the transaction. You can go to write the entry in the journal in this way. Okay students, I hope you understood how to write the credit sales entry for the credit sales in the journal. Thank you for watching this video.